Hello everybody, in this video I'm going to be doing a brief stock analysis on Verizon, and if you do end up enjoying this video, please come check out my channel as I have done a ton of other videos in this kind of format. The very first thing I wanted to do for Verizon is take a look at the 5-year chart on Yahoo Finance, and it appears that there's growth on this chart, but there's actually only about 10% growth in the last 5 years for Verizon, with its fair amount of dips, as you can see, so not very strong growth for Verizon here. And if we look at their revenue and earnings for the last 4 years, we can see that revenue is pretty steady from year to year, and then earnings is pretty high in 2017 and then considerably lower in 2016 and 2018. They did pretty well in 2017, and it's looking like they're going to do at least as well in 2019. And then last year in 2018, they were spending a lot of money developing their fiber optic network that is out now for their wireless plans, as well as developing various things for their 5G network that's available now and starting to roll out. I'm very sorry about this image being a little bit blurry and it being hard to read at the top there, but one thing definitely worth talking about is that Verizon definitely does have the best coverage in the US when compared to T-Mobile, Sprint, and at&t. And it may seem a bit biased towards Verizon saying that. I do have Verizon on my phone and internet, but I think that really makes them seem like a premium network with having the best overall coverage in the country. And then just a few things worth mentioning about Verizon right here. The 52-week range is about $52 to $61.50, and it's at about $55 right now, so it's right in the middle there. And then the 1-year target estimate is about $60, and I think that's a pretty good, pretty high target estimate. I doubt they'll be at $60 1 year out from now. And then they have about a 4.34% dividend, which is pretty great for Verizon, and I actually definitely see them increasing that dividend for several years to come. And it's really hard to make a Verizon video without talking about their biggest competitor, which is at&t. They're down about 4.44% in the last 5 years, and that may seem a lot worse than Verizon's 10% growth in the last 5 years, but at&t has a 6% dividend compared to about a 4.3% dividend from Verizon. So in my opinion, with that dividend, at&t is a bit stronger of an investment. at&t tends to sell their plans for a lot cheaper than Verizon does, so I think at&t is actually going to be able to expand their market share in international markets a lot more easily than Verizon is. And if you didn't know, at&t is actually the third biggest telecom company in the world behind Verizon, and then a Chinese telecom company being in first. And I think they definitely could be able to overtake Verizon in the number 2 spot, even if Verizon is able to maintain the number 1 position in the US. If they're able to expand in a lot of different European countries and even into South America and Africa, they could definitely be number 1 over Verizon. And then something else I just wanted to note real quick is that T-Mobile and Sprint are almost definitely going to be merging now into one company. And I wish I had some more statistics on this for you, but there's really not a whole lot of information out there on this right now. So previous to this merger, T-Mobile and Sprint were definitely competitors and taking up some of the market share from Verizon, especially here in the United States. But overall, they were not a huge competitor. And now after this merger, Verizon is definitely going to have to look out and compete with this company. And it's definitely something to look at going forward. The next thing I wanted to take a look at is a couple of points given by an analyst at Morningstar who gave Verizon a buy rating. And the first point is that a relentless focus on network strength over the past 15 years has put Verizon in an enviable position. Like I kind of mentioned earlier, its wireless network provides the broadest coverage in the industry, and its reputation with customers is sterling. So since Verizon has invested so much in having the best coverage in the United States, I think that really has created a ton of loyalty with its customers, which will last for decades to come. And then the second point is that while other wireless carriers are tangled up in merger activity, like I mentioned previously, and with merger activity comes a lot of different costs, Verizon is relentlessly pushing forward its core business, expanding its fiber optic network, and deploying 5G wireless technology. And again, like I've mentioned a couple of times now, it's definitely a huge bonus for Verizon having the best fiber optic network for its wireless network, as well as deploying some of the best 5G technology in the country and even in the world right now. And then I also just wanted to mention this third point made by the analyst as well. With the largest customer base in the US, Verizon is also the most efficient carrier in the industry, delivering far better profitability than its rivals. So that's kind of a strength and a weakness as I see it, because they do have better profitability in the US, which is a huge strength over AT&T and Sprint and T-Mobile, but internationally, I don't think that high profitability network plan is really going to work out as well. I don't think many foreign countries are going to want that high cost network compared to some lower cost networks. And next up, I wanted to take a look at a point made by an analyst at Morningstar who gave Verizon a sell rating. And the first point is looking a little confusing, but I believe what it's really saying is that they're going to end up needing to change their business model a little bit moving forward. And then what I wanted to focus a little bit more on is the second point, which says that Verizon's balance sheet isn't the fortress it once was. Paying down debt will limit strategic flexibility and shareholder returns. So if you do take a look at their balance sheet, you will see a pretty good amount of debt. And if you were to look at AT&T's, they would actually look pretty similar, just on a little bit of a smaller scale. So I think it's pretty normal for these big telecom companies to have a pretty high debt ratio. So with all I've said in this video, I do not think Verizon is a really strong investment. I think there are a lot of different companies that are better investments than Verizon moving forward. If you're looking for a blue chip company, I think Microsoft is a much better investment. If you're looking for an income stock or dividend stock, I think New Residential Investment is a much better company. And if you're looking for a growth stock, even though it's very speculative right now and you may want to look for a different growth stock, I think Tesla is a really good investment right now if you believe in Tesla and their future moving forward. And maybe you wanted to look into Verizon because you're looking into different 5G stocks. I actually think there are some better 5G stocks moving forward. I made a very brief video just mentioning some 5G stocks that are going to grow moving forward if you want to come check that out on my channel. Thank you so much for watching to the end. Come check out my channel for a lot of other brief stock analysis videos very similar to this one, and I've actually done a lot of videos on stocks that I think are much stronger investments than this one, and subscribe for more content. Thank you.